Our next guest says he expects S&P returns to slow just a bit into the end of the year and the start of 2022. But he says there are still ways to invest in this environment. Let's chat with Hugh Johnson, chairman and head of investment strategy with Hugh Johnson Advisors. Hugh, welcome. Good as always to see you. I guess your thesis basically is that both the peak economic growth for this little mega cycle that we're in and peak earnings growth is behind us for now. Have I understand you correctly?
It clearly is, Tyler. We had big numbers in the second quarter, 6.7% gross domestic product. When you take a look at the numbers for earnings, for example, for this year, about 49%. When we look at 2022, what we're going to be seeing is something like 9% year-over-year earnings growth for the S&P 500. And then 2023, we'll probably see something closer to 6%. So we're seeing the peak in growth rates, and I think that's going to get reflected in the kinds of returns that we're going to see in stock prices. So I've got the stock market really coming down a little bit, about 3% between now and the end of this year, and only up about 2 to 3% between now and the end of 2022, and 9% between now and the end of 2023. Now that can change, and that can change if we get much better earnings numbers. And there's a good chance of that. You know, that's been the story of this bull market. Better earnings numbers, continuously better earnings numbers. But I don't think it's going to get a lot better. I think we're going to be in a low return environment.
But so let's say we buy your thesis here that returns are going to come back closer to the norm, that earnings are going to still grow but decline from historic growth numbers. How do I make money in that kind of market? Where is there cash to be made?
Yeah, it's going to be tough, Tyler. Obviously, the first thing you got to do is pick the right sectors. And Mike Santoli said something pretty smart or pretty perceptive when he was on just a minute ago. He said the first thing you've got to do is pick the right sectors. He mentioned a couple of them, but materials, industrials, they're performing well today. They're going to perform well if we have an ongoing bull market, which I still think we're going to have. And then I would also add consumer discretionary and technology. Those are economically sensitive sectors, and those are the kinds of sectors that perform well. So the first thing you got to do is get the sector right. And those are the four sectors I would focus on. And then the next thing is you got to try to enhance your returns by having a good dividend yield. So a good dividend yield in those sectors, it's always attainable. I think it's the combination you can do. And you can even go beyond that by working with private equity if you're investment advisor can steer you in the right direction towards real estate. But that's a little beyond what I'm talking about. When I'm talking about sectors right, dividends, that's the way to do it.